What is the best dividend ETF available now for long-term purchase and hold? There are numerous dividend ETFs and numerous indicators to consider. We're going to reduce this list of 14 dividend ETFs to just one or two to keep forever in this video by breaking out those essential elements for you. Let's take a look at a spreadsheet I made earlier this year that details the overall returns, income, and capital gains for the top dividend ETFs available. We considered a 5-year, 10-year, and just a 1-year 2022 history, and we will take that information into account when making our final decisions. But before we can do that, we really need to narrow down this list of 14 prospective ETFs to only those that you could actually hold on to indefinitely and never sell. There are a few things to take into account when choosing a high-quality dividend ETF that I might own for life and never sell. The first thing is your past. How can we claim that a dividend ETF with a shorter history, say 3 to 5 years, is superior to one with a longer history, say 10 to 20 years? You simply cannot. Therefore, I do consider the dividend history and an active dividend ETF to be important. So we're going to start by eliminating these funds. DGRO, SPYD, DGROW, and NOBL, simply put, they lack a 10-year history. That reduces our list of dividend ETFs from 14 to 10. The worst performing ETFs will also be excluded based on our 10-year analysis. Regarding portfolio balance and total returns, it will be HTV right here, followed by the Invesco Sub 500 Quality ETF SPHQ with the lowest dividend yield. That reduces our number from 14 to 10 and then to 8 now. There are a few more things I want you to seriously think about in addition to these 8. Does it have a reasonable yield first? A dividend ETF just cannot compete with a yield of 1 or 2.5%. This indicates that we must sell both SDI, which currently has a yield of 2.55%, and VIG, the Vanguard Dividend Appreciation Index, which now has a yield of 1.96. The number of holdings in the portfolio is another aspect we must take into account. These dividend ETFs range in size from those with 30, 40, or 50 holdings to those with hundreds. To ensure that we obtain an adequate level of diversification, keep in mind that by electing to use dividend ETFs, we are opting to avoid using individual dividend equities. 2 of the remaining dividend ETFs that we have here stand out, SCHD and PEY, both of which have just 52 holdings. Therefore, we will go ahead and eliminate those 2 ETFs from our analysis. We also need to take dividend growth rate into account. If we own a dividend ETF and we know its yield, we need to know how much the dividend is increasing each year. These 4 dividend ETFs' 1, 3, 5, and 10-year growth rates are taken into account, and DVY has very steady 3, 5, and 10-year growth rates, as well as a recent uptick. VYM is the lowest of the 4, but it has been fairly stable throughout the course of 1, 3, 5, and 10 years at 4.32, 4.1, 6.8, and 7.13. SCHD has historically been by far the most stable rate, notwithstanding a little decline over the past year. The growth rates over 3, 5, and 10 years were all in the double digits. Then Wisdom Tree DHS appeared in the most recent year, which is similarly robust, and it had rather good dividend growth rates. Really, there's no justification for excluding any of these 4 ETFs based just on dividend growth. So let's continue on. Ultimately, we should take past performance into account while evaluating these 4 dividend ETFs. However, keep in mind that past performance does not predict future outcomes. These funds may continue to operate as they have in the past or may behave quite differently. In light of this, let's examine how these 4 ETFs have performed historically when compared to one another. The 5-year histories are as follows. DVI, VYM, SCHD, and DHS AEE ads. None of them appeared in the top results for capital gains or income. In terms of portfolio balance and overall returns, SCHD was really the highest. This applies both to dividend reinvestment and to living solely off of dividend. If we look at the past 10 years, DVY did fairly well in terms of income when only relying on dividends. However, when capital growth is taken into account, SCHD comes out on top. At the end of the day, we have 4 distinct dividend ETFs, all of which have yields that are quite similar and dividend growth rates that are fairly comparable. You really can't go wrong with any of them. After taking into account their past performance, quantity of holdings, and performance in comparison to their peers, For instance, VYM has a sizable portfolio and, in my opinion, is a very reliable dividend ETF. You might even have a look at DVI, which of all dividend ETFs has the longest track record dating back to November 2003. But in the end, based on all the factors, I believe that if you can only choose one, you should choose SCHD. I am aware that there's been some trepidation about SCHD's performance in comparison to the SERP 500 so far this year. Compared to the S&P 500, which is up 19.2% on the year, the SCHD is essentially flat. In a subsequent video, we'll examine some underlying issues I believe are important to consider. Keep in mind that when we examine price history, we are aware that pricing is ephemeral and that we shouldn't worry about daily events. Along with their dividends, we should consider the stock price's long-term growth. Just looking back 5 years, we can see that SCHD is in the green while VYM, which I would rank as the second strongest of the 4 ETFs, is in the red. SCHD was not consistently the best stock for capital gains in this area. The decline in SCHD we've seen so far this year could be a passing problem, or it could be an indication of something more serious. Hopefully, this movie was helpful to you in some way. Please add your 2 cents to the discussion below. I will try to reply to every comment the day after I publish a new video. That's all I have in this video for you folks. Thank you for viewing and have a wonderful day.